So the name of the bank is Oriental Bank. Problem 8 is Oriental Bank. Balance sheet as on 31st March 2015. 31st March 2015. So let's just directly go to the schedules. Schedule 1 is capital. Schedule 1 is capital. Now here we have, they've given the authorized capital as well as the subscribed capital. So authorized capital. If there's a problem with in the voice, please send me a message. Somebody can turn on the audio and tell me. We don't have to remove the thousands and nothing of that sort. We write the figures as they're given to us. So they've said 20 lakhs. Now this becomes, since they've told us that the face value of each share is 100 rupees, so this will actually become 2 lakh shares of rupees 100 each. 2 lakh shares of rupees 100 each. Okay. This figure, like I said, we don't take anywhere. It's just shown, given for information. Similarly, we have the issued, subscribed, called up, paid up, paid up capital. That's going to be they've given us a figure as 10 lakhs, so that's going to be 1 lakh shares of rupees 100 each. I hope everyone knows how we've got this figures. The only one that we have found out the only one that we had to find out is this 2 lakhs. Okay, that's not given, but how did I come to know? Because they've said the face value of the share is 100 each. So that's schedule 1. So in the balance sheet we are going to only take this figure. Then we move on to schedule 2, which is reserves and surplus. So here we have uh, okay, we have the funds here. So the first thing, now when they say reserve fund, okay, now when they say reserve fund, it's assumed that it is the statutory reserve fund. So that will always be the first item. Okay, I forgot to tell you this yesterday. When they say reserve fund, it's a statutory reserve. So reserve fund will be first. The amount given to us there is 15 lakhs. Then we also have profit and loss account is always the last item. We also have the fluctuation, investment fluctuation fund, which is 50,000. And then we write the profit and loss account. Balance in P&L account or P&L account. It's good to spell it out. So that is 4,25,000. So the total here, the total of this comes to 19,75,000. The total is 19,75,000. Okay. Then we move on to schedule 3, which is deposits. Towards the end, we have 3 given to us: current, deposits, then we have fixed deposits, and we have saving deposits. So current deposits given are 50 lakhs. When you have big numbers like this, please be careful of the zeros. Fixed deposits is 2 crores. Okay, so be careful of the zeros. This is 2 crores. And finally, saving deposits are 30 lakhs. So the total comes to 2 crores 80 lakhs. 2 crores 80 lakhs. Next is Schedule 4, which is borrowings. I think we have two here. We don't have borrowings at all. Okay. We have short-term loans under that. Okay. I told you that it's not very clear, but we're going to consider it under short-term loans. Normally, these things, now short-term loans can be loans given or loans taken. It needs to be made clear whether it's a debit balance or a credit balance. If it was a debit balance, it would have come under advances, where you have term loans and all. Yes, but they have not mentioned anything, but it's taken as credit balance, which is borrowings, which comes under borrowing. So this is 2,30,000. That's the only figure here. And finally, we have Schedule 5, which is other liabilities, other liabilities and provisions. Other liabilities and provisions. Now here we have given a very mixed up. Okay, we've got, I think, three things here. Telegraphic transfer payable, telegraphic transfer payable. All these come under bills payable actually. Telegraphic transfer payable is 4 lakhs. Then we have bank drafts payable, which is 6 lakhs. Then you have rebate on bills discounted. I told you, I explained yesterday why this is comes under other liabilities. So rebate on bills discounted, when we talk about rebate, it's basically discount received but not earned. And since it's as on 31st March 2015, you have received the discount but it's not earned. It's actually the income of the next year, that's 2016. So it can't be considered as an asset, it's put under other liabilities and provisions. Or it cannot be treated as an income of 2015. So rebate on bills discounted will be 5,000. The total of this comes to 10 lakhs 5,000. So we are done with all the ones on the liability side. We move now to the assets. Schedule 6, cash and balances with Reserve Bank of India. So we have cash in hand, which is 10 lakhs. And we also have cash with RBI. Cash with RBI, which is 20 lakhs. So the total here comes to 30 lakhs. Then we move on to Schedule 7, balances with banks and money at call and short notice. So here you have money at call and short notice is given first, but since balances with banks, other banks comes first, we'll write that first. And here we have cash with SBI. Okay, just to try and maintain the format, cash with SBI, 20 lakhs. And you also have money at call and short notice, which is 45 lakhs. So 20 plus 45 comes to 65 lakhs. Next is Schedule 8. Do we have anything under Schedule 8? Yes, one. There are some investments. Schedule 8 is investments. So here you have, I think, just one item, just investments, which are 35 lakhs. So you don't need to total that up. Then we move on to Schedule 9, advances. So here you have loans and advances, which is given to you. Loans and advances, which is 50 lakhs. Then you have cash credit, which is another 50 lakhs. And we also have bank overdraft, bank overdraft, which is another 5 lakhs. So 50 plus 50, it is 1 crore, 1 crore 5 lakhs. I think we missed one more. Yeah, we have bills purchased and discounted. Sorry, I missed that one. That should actually come first. Bills purchased and discounted. Bills purchased and discounted, 80 lakhs. So the total of this is going to come to, I think, 1 crore 85 lakhs. Total will be 1 crore 85 lakhs. Be careful of the zeros. This problem, sorry, put extra zeros. 1 crore 85 lakhs. Okay. Then we move on to the next one, which is Schedule 10, which is fixed assets. Normally we have premises first, and I think that's the only thing that we have in this problem. We don't have any other fixed assets. Like I said, when you are solving, if you have the hard copy with you, just stick the items as you take them so that you know what's taken and what's still left to be taken. Especially for the exam, You can take it on the question paper or something like that, so that you don't take something twice or you don't miss out something. This is 7,10,000. Anything under other assets? No. Okay. So the next one will be Schedule 12. Schedule 12 is contingent liabilities. Okay. Now, we have identified some here. First thing is acceptances from customers. Acceptances from customers, which is 25 lakhs. Then there is also letters of credit issued. I think that's it. Yeah, there are two here. Letters of credit issued. Just give me 1 minute. So the letters of credit issued are 2,50,000. Where are these letters of credit used? You may have studied this at some point of time. Does anyone know where are these letters of credit used? In case of which type of transactions? And how does it become a contingent liability? Okay, basically the letters of credit are used in are normally used by importers. Okay, wherein the bank guarantees a person from another country that the buyer will make a payment. For example, say suppose there's a bank in India. It need not only be in case of import and export, it can be in case of other transactions as well. So say suppose we have a buyer A in India who's importing goods from some person called B in some other country. So what happens is if the buyer goes and asks for a letter of credit from the bank, what does that mean is in case the buyer is not able to pay B, that is, if A is not able to pay B, the bank will be liable, and that's why it's a contingent liability. Okay, if the buyer pays, if the importer pays, then there is no liability for the bank. But in case of default on the part of the importer, that's A, okay, the bank will have to pay. The bank will then try to recover the money, no doubt about that. But at least for that time, the bank will have to pay. So it becomes a liability, a contingent liability, because we don't know whether A will pay or A will not pay. Okay, so that's the letters of credit issued. So this comes to 27 lakhs 50,000. I think that's it. We've transferred everything except bills for collection, which will come as a last item. Okay, yeah, I think we've done transfer everything. So now we just have to transfer it to the balance sheet. So we start with capital and liabilities. So you have capital here, first one. Then you have reserves and surplus, deposits, borrowings, other liabilities, and provisions. Other liabilities and provisions. Let's transfer this. This is 1, 2, 3, 4, 4, and 5. So 1 is 10 lakhs. Share capital is 10 lakhs. Then reserves and surplus, how much did we have? 19 lakhs 75,000. 19 lakhs 75,000. Then we have deposits is 2 crores 80 lakhs. Borrowings are 2 lakhs 30,000. Just be careful with the figures. 2 crores 80 lakhs. And borrowings are 2 lakhs 30,000. Then we have other liabilities and provisions, which is 10 lakhs 5,000. Okay. Then we have the total here. To the total once we finish the assets. Assets, we have cash and balances with Reserve Bank of India. Cash and balances with Reserve Bank of India. Then you have balances with banks and money at call and short notice. This is payable within 15 days. So it's called money at call and short notice. Then we have investments, advances, fixed assets, other assets. So this is 6, 7, 8, 9, 10, 11. So a total of 6 is 30 lakhs. This is 65 lakhs, 30 lakhs, 65 lakhs. Then we have investments 35 lakhs. Then we have 1 crore 85 lakhs. One crore 85 lakhs. And then I think fixed assets is 7 lakhs 10,000. We don't have anything under other assets. This is nil. So if you total the two sides, the two parts, it will be, the total is 3 crores 22 lakhs 10,000. 3 crores 22 lakhs 10,000. 3 crores 22 lakhs 10,000. Okay. We also need to mention our contingent liabilities. Which is 12, and the amount is 27 lakhs 50,000. $27 lakhs 50,000, and bills for collection is 50,000. Bills for collection 50,000. Okay, so this is how the balance sheet looks. Any questions?